Hello, everyone, and thank you for joining. My name is Rona Biju, and I will be your host for today's webinar. Before we dive right into the webinar, I would like to give a brief introduction about our company. ITC Accounting and Tax Consultancy is one of the top and most reliable tax agency firms in the UAE. In a short span of time, our team mastered how to give clients the best tax solutions. You can expect an uncompromised attitude when it comes to quality and professionalism. We deliver a sleek and professional outcome that sets us apart from the competition. With the leadership of Mr. Ahmed Sharfuddin, we've already positioned ourselves as a VAT and excise tax specialist in the market. We have a fast growing team of qualified and dedicated professionals with innovative and commercial approaches to meet today's highly challenging business environment. By bringing the best team at your service, highly experienced tax and finance specialists in the industry, ITC will continue to create long term relationships with various businesses by having the ability to deliver as exceptional service. As a testimony to our strategic improvement approach, most of the customers we serve are generated of referrals and repeated businesses. Moving on, I would like to give a brief introduction about our panelists for today's webinar. Mr. Dharaj Kumar. Dharaj Kumar is an ACC affiliate with over 8 years of experience specializing in corporate tax. He has worked for several globally reputed organizations such as the Big Four consultancies, giving him a deep understanding of direct and indirect taxation, international taxation, and transfer pricing. Dharaj has collaborated with a wide range of clientele across various domains and industries and is committed to helping clients understand their tax implications and optimize their tax efficiency. As a highly skilled and experienced professional with expertise in various aspects of taxation and finance, Dharaj excels in guiding clients on strategic decisions and offering insightful recommendations to enhance their tax compliance and mitigate potential risks. Dharaj's dedication to ensure adherence to tax laws has earned him the respect as a renowned corporate tax professional in the UAE. Known for his unparalleled technical understanding, Dharaj is the go-to consultant for the clients.
Thank you, Rana, for introducing me. So today we are going to discuss about tax benefits for the SMEs. As you may know that recently Tax Authority issued some guidances for the small business relief and some registration requirements in the UAE. So the first question comes, how to prepare for implementing corporate tax in the UAE. So first thing we need to understand is that what are the corporate tax rates in the UAE currently. So currently the FTA has introduced two corporate tax rates. First one is at 0% and the second is 9%. The 0% tax is for the companies who are registered in the free zones, and the 9% rate is for the standards are where they do not qualify, where the companies do not qualify for the free zone benefits and which are at the mainlands. So any taxable income up to 375,000 is taxable at 0%, and any taxable income up more than this amount will be subject to tax at 9%. So now, after knowing about the tax rate, the second question comes, when is the first accounting period, first tax period for your business? So the corporate tax is basically applicable for the companies whose accounting period starts on or after June 2023. So and you are supposed to pay corporate tax after 9 months after the end of the tax period. So as we discussed earlier, any taxable income up to 375,000 will be taxed at 0%, and any income above 375,000 will be taxed at 9%. Beside that, the tax authority has introduced a small business reliefs for the businesses who has revenue less than 3 million. So they will be applicable to claim small business relief. Now, the next question comes, how to get ready for the corporate tax in the UAE. There are a few questions we need to understand, and the questions are as follows. Is your business required to register? We need to know whether your business is required to register because there are certain limits revenue limits based on which it will be determined whether your business is required to register or not. So any sole proprietor, if they have any revenue less than 1 million, they are not required to register for the corporate tax. But all the LLC companies, all the registered persons, or we can say all the legal persons are required to register irrespective of their revenue. However, the taxability of corporate tax rate is based on your taxable income. The second question comes, what is the accounting period of business? This is what we discussed earlier. So the accounting period for the tax purpose will start any period which starts after June 2023. So for example, if your accounting period starts from July 2023, then your first taxable period will be starting from June 2023 until June 2024. That means you are required to pay corporate tax and file the return after 9 months after the end of your accounting period. That means it will be 9 months after June 2024 in this case. The next question comes, what is the need to find out deadline to file return based on accounting year end? So this is the same we discussed earlier. The tax period will base on your accounting period. The next question comes, are there any changes required to be made into the corporate structure of the business? Surely, because corporate tax is a very technical and very in-depth tax regime, which required many changes in your prevailing accounting system. That means that there are some expense items and some revenue items which the accounting treatment of which the tax authority may not agree. So we need to make changes in the prevailing accounting system. The next question comes, would the business need to hire new talent? Yes, depending on the complexity of the corporate tax regime and the complexity of the business might need to hire technical staff, including the consultancy firms, to implement properly the corporate tax regime. And the last question comes, is the business capable of maintaining records as per corporate tax regime requirements? Yes. Okay. These are the same questions we have discussed. We'll just go a little in detail about these questions. What is the accounting period of the business? So the accounting period will be any period which the business chooses, but when it comes for the tax period, it will depend on your accounting period. So we can say almost it will be the same for the tax reasons. But the corporate tax is applicable for any period starting after June 2023, and the companies are required to pay corporate tax and file the corporate tax returns 9 months after the end of your accounting period. So the deadline will be, as discussed, it will be 9 months after the end of your accounting period. So let's say the corporate tax regime in UAE it starts from June 1, 2023. So any accounting period starts after June 2023 is required to file corporate tax. So for example, if the accounting period is starts from June 2023 and ends at December 2024, the companies will be required to file corporate tax 9 months after the end of this accounting period. As discussed about the corporate changes required in the existing structure of the companies, yes, considering the complexity of the corporate tax regime, there are certain changes that will be required to be made in the existing system. And secondly, in order to get some benefits or some perks, the companies are also required to again look into their existing structure and see how they can get benefit of reduced tax by staying in the existing walls of the corporate tax and legally reducing the taxes. As discussed, the business would need to hire new talent because of complexity and nitty-gritties of the corporate tax law. So they might need to require some skilled professionals along with some professional consultancy firm in order to adequately implement the corporate tax regime. The last question comes, are the business capable of maintaining records? As you may know that there are certain requirements to maintain accounting records and bookkeeping for some period. So for the corporate tax, the requirement is for 7 years. This means that the businesses must have resources to maintain such record for this long period. Thank you.
Thank you, and a big round of virtual applause for Mr. Duraj for sharing his expertise and insights with us today. Your valuable contribution has truly enriched our understanding. Mr. Ahmed Zawain. Ahmed Zawain is an accomplished tax manager with a proven track record in VAT and general accounting. Notably, this professional holds esteemed qualifications, including the prestigious PFA, Professional Financial Accountant, and AAD, American Accounting Diploma. These certifications are a testament to their dedication and proficiency in the field of finance. With a strong focus on accuracy, compliance, and financial reporting, this tax manager has consistently demonstrated exceptional skills in handling complex financial matters. His ability to navigate tax regulations and accounting standards makes him a valuable asset in any financial team, as he's proven to be reliable on countless occasions when it comes to lending his support. With an unwavering dedication to delivering exceptional results, Zawain is ready to take on new challenges and contribute to the success of any organization in the finance industry. This tax manager is well equipped to contribute significantly to the success of any organization, ensuring precision and efficiency in financial operations.
Thank you, Ona, for this introduction, and we can move on to the next slide. About the importance of accounting and financial audit in the UAE. We'll speak today about the accounting and financial audit. We can start with accounting, which is plays the most important role in the business all over the world, and has broader implication for both organizations and overall economy, which is extended beyond simple recording and bookkeeping for the interest and for the accounting transactions in the company itself, and also helping the management to take the proper decision for the taking loans or any facilities with the banks, any credit or overdraft from the banks, and also for the financial transparency align with the UAE regulations. For the financial information and decision making, accounting provide accurate and timely financial information, which is help the business make informed decisions, and the managers also can use these financial reports to analyze the company performance monthly wise and annual wise, with comparing for the previous with the previous financial year as per the IFRS. And the second point is measurement of financial performance for the company and the business entity. Accounting allows organizations to measure their financial performance all over the year, day by day. So there's tracking also for the revenue and expenses to get the cost center and revenue center for each project if there's more than one project in this company, and also to evaluate the profitability and operational efficiency. Next slide, please. The third point is resource allocation, which is mean resource allocation is critical for the company to maximize the profits and minimizing the cost and expenses. So we need to track every and each transaction as per the accounting principles to help the organization and business owners to allocate the resources to their projects. The fourth point, stakeholder communication. For the financial statement, it's already included the balance sheet, income statement, change in equity, cash flow statements with notes and disclosures, which is considered as a keys for the communication financial information to stakeholders, such investors, creditors, as we mentioned, suppliers, employees, and banks also if there's any loan or something like that. The next point is regulatory compliance for the accounting. The businesses comply with the legal and the regulatory requirements in the UAE, which is related to the financial reporting. Accurate financial records are essential for tax calculation, for VAT compliance, for reporting to regulatory bodies like certified bodies or governmental entities. And also for the next point, for performance evaluation, the accounting giving the businesses a chance to evaluate their performance against the industry as per the IFRS and also the accounting principles. Next slide, please. The planning and forecasting. Financial data helps organizations forecast future trends for any obligation like financial obligation, or there's any loans, payment of installment or something in the future. So it is forecasting and helping the businesses in the UAE to budget their needs, their financial needs, and getting the proper forecasting for their expenses and revenues to get the proper cash flow after a certain period. For the investor confidence, transparent and reliable financial information for the investors. It is giving also accurate accounting practice, like enhance the credibility, attract the investment to the company. If there's any investors need to invest in this business, they can check the financial statement for the previous year and get the full information about the cash flow, about the profitability, about the issues and financial analysis for this financial to get the proper decision and invest in this entity. The next point for accountability and transparency. This also giving accountability by tracking the flow of funds which is coming from the owners or the shareholders in the business itself, in the organization, and also prevent any misuse of fund or fraud or money laundering, something like that. So it should be transparency as per the accounting standards. Next slide, please. For business evaluation also, the accurate and proper financial statement as per IFRS, this essential for determining the value of business, like sales and expenses in case of acquisition or liquidation. It will help the business to evaluate the position of this company for the profitability, or there's any dues or loans on the company itself. So it will help the management or the investors to get the full picture of this. For the economic analysis also, the accounting help the economic analysis to measure the GDP, track inflation, and analyze also the financial markets if there's investment in the financial markets or stocks. For example, there's some companies investing their money, or if there's cash flow on this company, they can invest in stocks or bonds all over the world, not only inside UAE. For the next point, the risk management. Accounting help identify the financial risks. This also enables the companies to develop the strategies to mitigate the risk and make more informed decisions. Next slide, please. We already talked about the accounting and the importance of the accounting in the UAE. The second topic for the financial audit, which is very important to each company here, especially after implementing the corporate tax law. So when we talk about the financial audit coming after a proper accounting and bookkeeping as per the IFRS. So for the financial audit, this like checking and examination of the organizations for the financial statements and the records, which is independent and qualified, and also in the line with AS or the auditing standards, international auditing standards, as per the position of this company for the giving impression, a good impression for the investors, stakeholders, creditors, banks, also in case of any loan, and also for the management itself to give them the full picture of the financial position for this company, and make sure that everything is in the line with IFRS, and there is no fraud, no any mistakes or misusing of the fund, and with also the disclosures and notes which is coming after the financial statement to complete the full picture of this. The first task and the first step, we can say in the financial audit, the planning. Planning means planning for the financial audit process. The audit process begins with the planning and also establishing the financial audit process and cycle to implement these steps properly and get the full result and full feedback of this process. The auditor taking also the risk factors that called impact in the financial statements, and also there's like timeline should be met with by the auditor himself to get the final plan and final report of this financial audit process by the end of this. Next slide, please. When we come to talk about the risk assessment, the auditor himself identifies the risk of this company as per the financial, which is provided by the client, to understand more about the internal control in the organization, and also the area of financial reporting to avoid any errors or misunderstanding, or there's some mistakes done by the management itself or the accounting team. Next slide, please. The internal control evaluation, the auditor evaluates the internal control in this company based on the financial statement, which is provided from the accounting team to make sure that it is there's accuracy and reliability of this financial reporting. And also this helps the auditor to determine and find the weakness point on this financial, to focus on it based on the standards. Next slide, please. Substantive testing. This sampling techniques may be used to test representative sample of this transaction, and also giving test about the compilation and accuracy of this existing financial statement and financial transaction, which is based on the accounting and bookkeeping process. Next slide, please. Analytical procedures. These analytical procedures involve comparing financial information over time or against industry benchmark. Like, for example, if we have a client like a hotel or in a hospitality industry, we can compare this with the previous fiscal year for the financial figures, or comparing this with another competitor on the same market inside the UAE, for example, to analyze in proper way the operation and the result based on the benchmark on the same market. This procedure provide us insights into the potential risks, if there's some potential risks in this with this client or in this entity. So it's provide us with the full impression about the financial statement and financial report to make us able to realize the weakness point with the client. For the audit evidence collection, we are collecting the relevant and sufficient evidence which related to our samples and also not related to the highest amounts or highest values on the same fiscal year. No, but also related to the risk on this entity to provide us with the full impression about the accuracy and completion of the accounting cycle itself within the process of the audit. Next slide, please. Audit documentation. The auditor maintains comprehensive audit documentation. The outlines the work performance and also the evidence collected by the auditor to be sure that everything in the line with the standard, and also to provide a clear audit process and quality control also to make the full report with all the points which are related to the documentation. If there's something missing in between, or there's some documents not approved by the management or concerned person. For the next point, for reporting, after completion of the audit procedures, the auditor collect all the findings to include in this audit report, to submit this report to the organization's management and external stakeholders. The audit report should fairly describe and giving the impression about the accounting cycles and accounting transaction during the year. And there's two main types of the audit report. There's unqualified or clear opinion, unqualified report, and qualified audit report. This giving the impression about the financial statements. For the unqualified or clean opinion, it is giving the full image about the company, and it is fairly presented, and there is no misleading or mistakes on the accounting system in this company. But for the qualified report, it is giving impression that there's a lot of mistakes or some findings and risky area which is not in line with IFRS and IAS. Next slide, please. Next point, number 9, communication. The auditor communicates the result to the of the audit report to the organization's management and decision makers. If there is any significant findings, and the auditor can communicate with the management and give the recommendations and corrective actions. For the next point, number 10, follow-up and continuous improvement. Organizations may use the audit findings to enhance the internal controls, financial reporting process, and overall operation. The auditors also can provide recommendations to improve the control and operational efficiency. So now, what is the importance of the financial audit? The key objective of any external audit to give the independent opinion by the external auditor about the financial statement for the organization, to enhance the confidence for intended users. The intended users, like governmental entities, licensing authorities, whatever mainland or free zone companies, investors or banks for any loan, and other authorities. The external auditors in Dubai, for example, will determine whether the company's financial statements are fairly presented in accordance with the local and international standards, such as the IFRS. Auditing the company's books of accounts and financial statement will promote the consistency and objectivity of its financial reports and assures also the external parties or external users of these financial reports that the financial statements are true and fairly presented. However, the submission of the financial reports is not compulsory for the mainland companies and many free zone companies in the Northern Emirates, and also many companies would require to audit their financial reports under certain circumstances. And also, by the way, it will be related to the corporate tax from now onwards for the comparison year to present all the figures fairly enough and in line with IFRS to be fair and in the same image. Now we can summarize the importance of the financial audit in small points, like for the renewal of the trade license or company license to comply with the regulations, and also for the companies under liquidation, it is required as a financial report attested from the external auditor, and for any branch of any company for the purpose of corporate tax to submit this financial report to any bank or non-banking financial institutions, and also to obtain the ICV certificate in UAE, which is more common in the contracting and construction company in UAE, approved by ADNOC, and for making better business decisions for the decision makers. The first one is to renew the company license, whatever is trade license or service license. For example, for most of free zone authorities in Dubai, it is mandatory for the companies to submit the audited financial reports to the free zone entity to make sure that everything is in line with the regulation of the free zone authority and in line with the UAE regulations. They required the audited financial statement at the time of the renewal any license inside the free zone, and also for after the completion of the financial year. The first point for the importance of the financial audit is renewal of the company license, whatever is state license or service license, because most of the free zone authorities in Dubai have made it mandatory for all the companies to submit the audited and attested financial report. The company should submit the audited financial statement in the time of the renewal of the trade license or within a specified period of the completion of the financial year. And the free zone authority will not renew the company license in case of they failed in submission of the audited financial statements. Some free zone authorities request the submission of the attested financial report, like DAFZA, Dubai Airport Free Zone Authority, and DIFC, Dubai International Financial Center, and Dubai Silicon Oasis, and also Dubai Development Authority. Second point, to comply with the regulations in UAE, even though the submission, second point, to comply with the regulations in the UAE, even though the submission of the audit reports is voluntary for most mainland companies, but not like in the free zone area, because it is under the free zone authorities. And also the companies operating in certain industries are still required to have audited financial statement. And for the company under liquidation, when the company is under liquidation in the UAE, the shareholders need to have their financial statements audited by the external auditor to give the liquidator chance to get the financial statement audited for the cancellation, the license, and for further procedures. For any branch of any company, UAE government allows the formation of a branch of a local company as well as a branch of a foreign company in the country. However, the branch office will be required to submit the audited books of accounts and the financial statement at the time of the trade license renewal in the UAE. They should audit the financial reports through the audit firms in the UAE to make sure that everything is in line with UAE regulation and IFRS, and also to present the relationship between the branch here in the UAE and the mother company or the headquarter in the foreign country. For the purpose of UAE corporate tax, as we know that the UAE has recently released the Federal Decree Law number 47 of 2022 on taxation of corporation and businesses, which is called corporate tax law, which mentions the requirement for audited financial statements. Clause number 1 of Article 54 of the law says the FTA requests a taxable person through notes or decision to submit the financial statements used to determine the taxable income for a tax period in the form and manner and within the timeline described by the authority. Clause number 2 of the same article says that the Ministry of Finance may issue a decision requiring categories of the taxable persons to prepare and maintain audited financial statements. And also the importance of the financial audit for submission to any bank in UAE, because most of the banks or all of the banks request the audited financial statements for the company approved or attested by the external auditor with audit report for any submission for the loan or fund or any facilities with any bank in UAE. And for the next point also, which is very important for the most of the companies here in UAE, especially which they are working on the contracting or construction industry, to obtain the ICV certificate in the UAE, which is approved by ADNOC as a governmental entity. To submit for the ICV certificate in the ICV program, the company should have attested and audited financial statements to be submitted for the ICV certificate to get a good score with any bids or tenders with governmental entities in the UAE. The next point is for making better business decisions. Having audited financial statements will help you to understand your company position well and to evaluate the performance of the activity in this company, and also to make you able to take the decisions about the going on your business and the cash flow in and out, which is reflect in your financial statement. And we are done, and thank you for everyone for your time and for listening our webinar, and see you next webinar. Thank you so much.
Thank you, and a big round of virtual applause for Mr. Ahmed Zowain for sharing his expertise and insights with us today. Your valuable contribution has truly enriched our understanding. Thank you for joining us and sharing in this enriching experience. Your presence and active participation have truly made this session valuable and impactful. We look forward to connecting with you again in our future webinars. Until then, for any further queries regarding excise, VAT, or corporation tax, kindly drop us an email or give a call. The details are mentioned on the screen.